Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 8th April 2025. Public sector banks are recalibrating their deposit schemes in response to improved liquidity and the RBI's recent repo rate cut. While some banks like Bank of Baroda and SBI have reduced rates or withdrawn schemes, others such as Indian Bank and IDBI Bank are extending their special deposit offers for a limited period, adjusting to the evolving financial landscape. Securitisation volumes in financial year 25 rose 24% to reach a record rupees 2.35 lakh crore, powered by significant deals from private sector banks and NBFCs, according to a Crisil report. Key contributors included HDFC Bank with a surge in bank share. Major asset classes were vehicle and mortgage loans, while microfinance and gold loans declined. Tata Group is preparing to raise $1.3 billion for its digital assets Big Basket and 1mg to compete more effectively in quick commerce. The fundraising will support Big Basket's shift towards quick delivery and 1mg's expanded healthcare services, backed by Tata Digital's aggressive growth plans. The Finance Act 2025 inserted a second proviso in Section 80 CCA subsection 2 to exempt the withdrawals made by individuals from NSS on or after August 29, 2024. The exemption shall be available to the following: A. To an individual investor only, and B. For withdrawing any amount standing to the credit of the individual under NSS with interest accrued on such amount. Since the withdrawal from the NSS account is not subject to tax, the Central Board of Direct Taxes has notified that no tax shall be deducted at source under Section 194EE on payment of the amount standing in the credit of the assessee under NSS, in respect of which deduction was allowed under Section 80 CCA. The IDBI has notified the IDBI Insolvency Professionals Amendment Regulations 2025. As per the amended norms, the IDBI has now extended the time to pass the limited insolvency examination from 12 to 24 months for registration as an insolvency professional. An individual shall be eligible for registration as an insolvency professional if he or she passed the limited insolvency examination within 24 months before the date of his or her application for enrollment with the insolvency professional agency. The RBI has been conducting public awareness campaigns across various media platforms, including text messages, television, and digital advertisements under the RBI Kehta Hai initiative. The RBI is now further expanding its outreach by adding WhatsApp as an additional means to deliver public awareness messages. This initiative aims to ensure that vital information reaches people in a simple, direct and effective manner, strengthening trust and resilience in our digital financial ecosystem. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.